We are back. It's a Friday, and you know Fridays are all about fixed income. What is happening there, and what are the expectations in the short to the medium term? Renaldo D'Souza, he is the head of research at Sterling Capital. He's joined us today to give us insights with this regard. Welcome to the show, Renaldo.
Thank you.
Tell us what's happening this week. The government did close its bond issuance for the 15-year, and there were two papers that were actually going that did actually come into the market to look for funding from investors. What was the result for this particular issuance?
In terms of subscription, it was within our expectations.
Okay.
We predicted about a 60% subscription rate, and the two bonds received a 65% subscription rate.
What does that equate to with regards to amounts of money raised?
In terms of amounts of money, was about 35 billion of the 50 billion they are looking for.
Okay, 35 billion. All right.
Yes.
And what was the pricing for these papers, for the issuance for 2018 reopen and the 2019 reopen?
So the 2018 reopen was slightly above our prediction. The rate was, the weighted average rate was 12.57.
Okay.
That was both the market weighted average and the weighted average of accepted bids.
Okay.
So they accepted what the market had bid.
So 12.57. And
Yes.
you were expecting 12.5?
Yeah, about 12.5.
Okay, so was it in line? So this issuance was actually spot on with regards to your expectations and market expectations?
Yes.
Okay.
For the 2019 bond was 12.67.
12.67?
Yeah, 12.67. Our prediction was about 12.6.
Oh, so it's more or less,
Yes.
not too far off. And which one got more demand? Was it the 2018 reopen or the 2019 reopen?
The 2019, though, more or less almost similar.
Okay.
Yeah, almost similar. And the reason was both, there's not much difference between the tenor of the two bonds.
That's true. It's just
Yes.
a differential with regards to a matter of months. Okay,
Yes.
so on one end, 12.67, that's the best rate that you could have gotten for a 15-year, issued
Yes.
earlier in 2019.
Yes.
Then yesterday, we also saw the auction results for the T-bills. Do you have any commentary on that?
If you look at the subscription rate of T-bills over the last, say in September, the subscription rates have actually declined.
Okay.
Yes, and the reason for this was tightening liquidity. The CBK has been mopping up liquidity. There's also that lack of clarity as to what direction the finance bill will take.
Yes.
Although our expectations were that a revision, complete repeal of the interest rate bill wouldn't be done. So now that there's more clarity, because members of parliament or the committee has said, the finance committee has said that there's going to be no repeal.
Okay.
There's more clarity as to the direction of interest rates.
Okay, so would
And,
that explain why we actually saw everybody just lump up with regards to the 364-day as opposed to uncertainty, which you'd seen earlier with demand going for the three-month paper?
Exactly. So the direction is, well, most likely direction of interest rates is down.
Okay.
So people would want to lock in the current rates for a longer period.
All right.
And that's why there's more interest in the 364-day.
The 364-day,
Yeah.
and that's at 9.7%.
Yes.
Okay, interesting. So then I'll give us your general overview when it comes to fixed income. We've looked at the T-bills and you've given us an overview of what's happening with the 15-year. What's happening with all the other papers? Is there liquidity in the market? Is there not sufficient liquidity in the market?
Liquidity was high until, say, 3 weeks ago.
Okay.
When if you look at this week, the CBK has been mopping up liquidity through repos.
How many repos were out there this week?
Two repos this week.
Okay.
That was on, should be on Tuesday and Wednesday, or Monday and Tuesday.
Okay. How much was pulled out of the market?
About close to 50 billion shillings.
Wow, okay.
Yeah.
So there's actually been a lot of
Slightly
money.
above 50 billion shillings. Yes.
Because it was 50 billion for the repo, then about 35 billion for the 15-year, and about 24 billion for the T-bills. There's actually a lot of liquidity in the market.
Yeah, there is, but there's also a lot of redemptions in September, about 123 billion
120,
in
okay.
both T-bills and treasury bonds.
All right, so that's why they're raising the funding for that?
Yes, and most of the funding is going to redemptions.
Okay.
Rather than new borrowing.
Now, okay, interesting. So for the redemptions, what particular papers are actually coming up for redemption?
I'm not too sure about which papers,
Okay.
but I think there's a 2-year bond.
There's a 2-year bond.
Yes.
Okay,
There's
interesting.
there's one bond here which is a 2-year bond.
A 2-year
coming up
bond.
for redemption.
Okay.
The rest are treasury bills.
Treasury bills.
Yes.
But Renaldo, where's the liquidity coming from? I mean, I can understand that it's in the best interest for the government through the CBK to actually mop up as much money as they can in light of the redemptions that you have just mentioned. But then where is this liquidity coming from? Because you walk around, people see businesses are not doing too well. But clearly there's a lot of money that's sitting somewhere. I just don't know where.
It's contentious as to the source of the liquidity. A lot of people have pointed towards the demonetization process, which comes to an end at the end of September.
Okay.
But we don't really have clarity as to whether this is the source of liquidity. Also, the next 2 weeks or the next week or so are going to see also injection of more liquidity through the county allocation by the central government.
Okay. Oh, yes. So now,
which is close to 50 billion
about
shillings.
50 billion shillings.
Yes.
All right. And is that going to go straight to the counties, or is that going to be allocated to the national government?
What happens is the money is injected into the economy through the banks. So the money is disbursed to the banks, and from there the counties use that that allocation. But so it won't be. We've had about 2 months of an impasse, and so
Okay.
the taps are dry. But
Yes.
we'd expect a lot of this money to be absorbed into the local
the-
economies.
okay.
Is quite quick, but also it will be in the banking system, and money in the banking system
Is money in the economy.
Yes, it's money in the economy.
Okay, so 15 billion, which means supplier payments will certainly be made good, at
Yes.
least over the next week or 2 weeks from there on.
Yes.
Okay, that's interesting. So now we have the Central Bank of Kenya meeting on Monday for the MPC. What's your expectation with regards to that particular meeting?
My expectation is just similar to what has been the case in the past.
Okay.
No change to the central bank rate, and the reason being just that the macroeconomic conditions have just been stable.
Okay.
We have, we'd say, a relatively stable shilling over the last, say, since the beginning of the year. Okay, there's been a slight depreciation, but it's still within, say, 5% depreciation.
Okay.
And also inflation is still within the bands between 2.5 and 7.5%.
And 7.5. So you don't expect any change to the benchmark rate?
No change to the benchmark rate.
Okay, fantastic. So you did a very interesting fixed income note for September 2019, your title being Market Liquidity Reigns Supreme. Give us the overview of this particular report.
This report was talked a lot about the liquidity in the market,
Okay.
which has been the trend. If you see, the interbank rate in August was about, on average, about 3.5%.
What has it been prior to that? Is that a high? Is that a low?
It's low.
Okay.
It's low. It's averaged, say, about 5.8% this year.
All right.
And right now it's above 5.8%, about 6%. But still, there's been some tightening of liquidity, but liquidity still remains
Liquidity
high.
still remains. All
And
right.
one reason is that banks are holding on to cash and injecting it in government securities as opposed to lending.
Okay.
This has been the case, say, over the last few years, although we've seen a slight increase in private sector credit growth,
Okay.
say, the last 2 months, but
All
still
right.
remains low
still low.
compared to the period before the interest rate caps were introduced in September 2016.
Okay. So do you get the sense that Parliament has said, or rather the Finance Committee has come out and strongly said, we don't see any possible repeal or adjustment to this particular rate cap law? Do you actually think that the banks will start now to extend credit? Because I'm thinking if I'm sitting in Treasury and I've just done 15 years at 12.67%, and typically if I was lending the same money to somebody for 4 years, I'd be at 13%. Of course, a slightly higher risk. But do you expect to see actually a surge of that money moving from government funding to the private sector?
I wouldn't say we'll see a surge
Okay.
in private sector lending because the risk remains high. If you look at the average non-performing loans,
All right.
it's close to 13%.
That's a very high number.
Which is
That's a very high number, which
Prior
means you have
to
to
caps
price.
was about 6%.
Okay, 13 is a very high number
Yes,
because
it's
it means
high.
that you have to price for it in one way or the other.
Yes,
Okay.
and okay, we're seeing a few banks change strategy.
Yes.
Banks like Stanbic Bank, KCB, and Equity have grown their loan books. At least in the first 6 months of the year, they've grown their loan books
Okay.
at close to 20%.
All right.
But also, there's that risk. The risk of default is still a concern, and they're also growing their holdings of government securities.
Wow, so nothing changes. We just continue as it is.
Nothing
continues
changes,
as it is.
but there's more concern of improving the asset quality of the banking sector.
And how would that happen?
It's just more about prudent lending.
Okay.
Some banks have shied away from particular sectors, say construction and manufacturing.
Okay. And it may be also an introduction or reintroduction of collateral, especially for the personal and unsecured lending?
Yes, obviously collateral has become a big part of lending.
Okay.
Even if you look at, since interest rate caps were introduced, there's been a growth of credit companies.
Okay.
But most of these credit companies are using collateral, either logbook or land title.
Or land title.
Yes.
Okay, so maybe those days of unsecured lending are far behind us for now.
Yes, even if you look at small things like the card lending, you're going to see there's a push towards prepaid cards as opposed to
credit cards. Okay,
yeah.
That's actually very true.
Yes.
And it's much easier. And I think with M-Pesa, you're able to link the two and it becomes easier to actually move money.
Yes, and it's an interesting way banks have, or something interesting banks have introduced to reduce the default rates in the retail lending space.
Okay, fantastic. So when we go back to your report, you have a very interesting chart there that just outlines the last issuances for 15-year papers. That is graph number 1. Our graphics team can help us put that up. And I think you're using this to come up with the pricing that you expected for the particular
yes.
paper. What has been the trend for other similar papers that have been issued over the last 1 year or so?
When you look at the most recent auction, there's not been a big distortion in the interest rates or the yields on the 15-year paper, and the reason is the curve and the long end has not shifted much.
Okay.
There's a slight decline or slight shift downwards, but not much change.
Not much changes
Yeah.
there. So when you're speaking about the yield curve, do you expect any lower movement or upper movement, or do you think it's going to remain stable between now and the end of the year?
I expect a bigger dip in the shorter end of the curve.
Okay, and the shorter end, you mean how many years?
Between 2 and 5 years.
2 and 5 years.
Yes.
Okay, and
And
what would
then
be causing this the dip?
The dip in the shorter end was because of we don't really have new issuances. People are also looking at it in terms of what is the direction interest rates are going. Interest rates are most likely going down.
Okay.
Yes.
And it's interesting because the same report actually says that the average tenor of government CBK debt, rather government of Kenya debt, is about 4 to 4.5 years.
Yes.
So could this explain that the government is actually going for longer dated paper, so that we don't expect any primary issuances for 2 to 5 years for a while?
That's true. In the beginning of the year, you'd see a blend. They would issue a short-term and a long-term paper, say a 5-year and a 20-year paper.
All right.
Right now, or a 5-year and a 15-year. Right now, the most recently, you saw a 20-year paper, and then also 2 15-year papers reopened.
And we expect to see that.
So it's a function of also high liquidity, where the government believes whatever they bring, the central bank issues,
they will certainly get.
They'll still get a subscription. So yes, I expect the trend to be, say, more or less 15-year long-term debt, because there's also that shift towards the government prefers to lengthen the average time to maturity of public debt, and this involves issuing longer debt.
Longer debt.
Yes.
What would be an appropriate length or rather tenor for government debt for you to be comfortable with? Would that be 5 years? Would that be 10 years? Would that be 15 years?
Ideally, the longer the better, but also you have to think about if you continue, or the central bank continues issuing 15 and 20-year papers, will they get the funding they need?
That's a good question.
Yes, possibly not. And so it reaches a point where they have to get shorter issues, maybe a 10-year.
A 10-year.
Maybe there'll be a 5-year.
Maybe another 5 year.
Yes. But as long as liquidity is this high,
then
the government is still in pole position.
Okay, but it's interesting because earlier when we were talking about the 24 billion allocated, or rather 24 billion was chasing a return with regards to the 364 T-bill. So that's a 1-year issuance. And then when you're giving us the results for the 15-year, 35 billion actually was allocated to the 15-year paper. So in a way, it actually consolidates what you're saying. So the government could want to issue 15-year, but then the market really is not interested in putting money aside for 15 years at this point in time.
Yes, and also look at the biggest buyers of government securities, the banks.
The banks.
Banks
What are they in terms of percentage of total holdings?
About 55%
55%.
of total holdings.
Okay, so they are the primary decision makers in that regard.
Yes, and banks wouldn't want to invest in bonds of, say, 20 years. They prefer a shorter term, say between 5 and say once you get a 15, there's interest in 15 years.
Yes.
But they would prefer to hold shorter term.
Okay, shorter term.
Yeah.
And what about infrastructure bonds? What is the outlook for this, and what has been the traction for the last 12 months?
Infrastructure bonds, in the past, they were issued to entice investors to purchase government securities.
Okay.
But yes, it's tax-free and there's a lot of interest in it, but also because of the high liquidity, even the normal treasury bonds, Kenya treasury bonds, still get high subscription rate. So there's no motivation.
There's no
from
motivation.
the central bank, yes,
to actually issue that.
And also the market, there's still high demand for treasury bonds.
Okay, that's interesting. Bonds, it feels like you should really be seated at CBK today. Like, your problems are much less than the opportunities that you have there, largely because people are chasing return. All right, so let's take a quick break. The NSE has just closed. Don't go anywhere. We will be back discussing fixed income opportunities and how you as a retail investor can tap into this. See you after the break.